Good morning, everyone. Welcome to the tradingsyndicate.org. I'm JJ, and this is our Globex session for the 26th of August. How's everybody doing? Month is almost over. Summer went in a blink of an eye. Pretty amazing. Hey, Raj. Hey, Jiraj. How you doing? Busy at work, Jerry? That's good. It'll keep you out of trouble. Welcome to the folks joining us on YouTube. Okay, so our overnight inventory is short. Okay. We pretty much do the same thing every day. We look for where's the inventory, number one. There's yesterday's close, probably around 80-85% short. We've had a correction already from the lows, and we didn't take out all of the single prints, but if I was a prediction guy, I would say today, what can you expect? I would expect back and forth trading like this from 28 up to 71. Right? Just back and forth as we fill in this area, which was almost like a gap in the middle of the day. That's when Powell came out and did his Jackson Hole thing on Friday. So I imagine back and forth in that area. Rotations. We have sellers at yesterday's low. We've tried to get above 52 a couple of times, but we have not been able to. I'll show you on the candle chart. And now the market is rotating back down. Let's see if we take out those lower stops. Here we go. So the market made two attempts to come back into yesterday's or the previous day's range. Could not do it. Did not have the buying to hold above 53. So as soon as we lost 53, that would have been a good short on the way down. We're looking for responsive buying at 44 here. And if that area breaks, if we take out 44 and 3/4, 44, we'll be looking for even lower still, right? This is good liquidation because what this liquidation does is it allows those people who got short on Friday, who got caught short, it allows them to come in and cover, right? Because those larger traders, they would have shorted Friday, they would have added to the short yesterday, and today, under the cover of night, they can get to do some covering, right? Take the steam out of the market a little bit before month end, which is Thursday, right? Friday's the last trading day of the month. Thursday is month end because equities take a day to settle. It's T+1. So everything gets marked to market on Thursday. Friday is when market makers mark everything to market. That's the last trading day of the month. They have to provide liquidity until the last session. So let's see what we can do here. Morning, Bakwan. Welcome to the room. Good to have you with us. A little bit of responsive buying. You can see where they're front running that 44 level right there. Now let's see where they sell into it. We're right at the overnight cost basis, which is 64.47. That's where 70% of the overnight inventory is priced. So we had a little bit of distribution above VWAP for about an hour and a bit. Now we're back down underneath it. Let's see what the next order of business is. There seems to be a seller up here in the 47s. Let's see how. If we clear 48 and say you're long, maybe you bought that dip at 45, 46. Most probably you're going to get a seller here at 48, 49. So you'll want to sell into that. Let's see if that seller is still there at 48. I know it's not much, but you got to work with what you're given, right? No, we took out those sellers. Okay. It's not a bad dip. Found some bids at 45. Hopefully next week it gets a little busier. Once people start coming back into the office, that'll be better trading conditions for us. As you can see, most of the move on Friday has gotten taken back. Hey, Omen, how you doing? There's 48 and 3/4. Now, a lot of traders will preemptively short VWAP. So if you are selling here, right? Say you're shorting 48 half, 48 3/4, 48 quarter, right? If you're selling in this area, where would you put your stop? Well, if we clear VWAP, right? If the market clears VWAP, then you know that you've lost your seller at VWAP, right? Because a lot of people will wait for a move to go up, and then they'll be shorting against that VWAP front run. As you can see, they're selling into the 48s here. But if the offer lifts above 49, 49/4, then you know that you've lost your seller. As a short seller, you need to have a seller. You need to have an active seller. If you don't have an active seller, see how these three candles have the exact same top? That's because the sellers are sitting there and they're hammering the bids when you get there. Now, they're not aggressive, but they're all competing at 64, 48 and 3/4. Right? If it offers, and see how it offered and it didn't print 49, right? So if you're shorting 48, right, and you got a couple short, I'd go and put some bids down at 47 half, right? So say I'm short 3 at 48.58, cover one at 47 half, put in a 47 quarter bid and see if I get hit at 47 quarter. I got hit at 47 quarter and I'll cover the rest of my short at 47. So that's how I would scalp that move, right? What I did was I take the short based on the fact that I see a seller, right? That's the only reason to short a market is because you've identified that the sellers are going to be there. How did I know they were going to be there? Because on a night like this, I would assume that they're going to front run VWAP. If they don't front run VWAP and they lift above VWAP, the business reason for my trade does not exist. Do you see that? So I shorted 3 contracts, right? 48 half and one at 48 and 3/4. And then I put those 47 bids down here to cover. So I took advantage of a quick change in price. Now that's not a look above and fail, that's a fail to look above 48 and 3/4. Does everybody understand the business reason for that trade? Hello? Is this thing on? Can you guys hear me? Okay. Just checking. Sometimes I feel like I'm talking to myself. Okay. I'll ask the question again. Do you guys understand the reason why I took the trade? Okay. All right. The business reason is because I saw a seller front running VWAP, right? Okay, good stuff. Cool. Just checking. Yeah, there's supply. Why is there supply? Hey, S&P. There's supply because sellers are competing, right? So when sellers compete, price goes lower. Now let's see what's next. Hey, Lonigan, how you doing? Cool. All right, when you take a trade, there's got to be a business reason. I like to trade VWAP Omen if it's flat. You see how flat it is this morning, right? Now, in volatility, VWAP will start curving up harshly or down harshly, and then it's absolutely useless, right? But in nice slow market conditions, when VWAP is flat, because VWAP is not a fixed reference, right? It's not static. That's why I like using the levels. But when the levels are there and VWAP is just above it, I know that traders will be selling what they bought long at 45 at VWAP. So I'm going to sell next to them, right? It's called selling alongside. I don't get to use it often because it's not usually this slow, right? When it's flat, it's more usable, right? But but in times of volatility, it'll start to curve up or curve down, and then it's not, it's a big pain in the butt. I like static references, right? Ones that don't move, that I can more accurately judge the order flow. But I knew that there was going to be some front running at VWAP. Because if I was long 46, I'd be selling 48 and 3/4 for sure, right? Because I know that they're going to sell VWAP, so I'll jump in front. And you'll notice I used my level and I used VWAP as a stop. VWAP is an institutional execution. It's how large traders are judged, or now actually it's how the algos are judged. There's VWAP execution models. So, Omen, if you gave me, how it works is, if you gave me an order to buy 1,000,000 shares, I'd like to get you prices under VWAP. If you gave me an order to sell 1,000,000 shares of stock, I'd like to get you prices above VWAP. So you would call me to work another order for you tomorrow. That's how the business works. Hey, Kunj. Possible short trade at 728. In After the fact, yes. At the time, I didn't see it. That's the honest answer. So you're talking here, right? When the market went and hit this level, right? After the fact, definitely. During, I did not see it because I had just started the stream. Now let's see if we creep over VWAP. And if we do, then oh, you're just joining us, right? I was short there. You're talking here? Yeah, that's where I was short. There's another look above and fail of 48 and 3/4. It's getting choppy now, though. That's the problem. Smaller the candles get, there's not much. It's good. You're seeing that, Howard, and you're right. Because every time we get near 45, 44, it bids, right? So what's going on right now is the market is absorbing liquidating volume from yesterday down here. It's being absorbed by short sellers, right? Because they want to cover before the end of the month, which is Thursday, right? So when it's conflicting, what's your best course of action, Howard? You'll trade less, right? And remember Howard, what was the rule from last month and the month before? For you, what do you do at month end? Remember your discipline rules from last month and the month before? Exactly, right? Very good. Very good, right? This way you protect the money that you've made this month, right? For a lot of traders, month end can be a very difficult time to negotiate the market. So you should be trading less, trading very small, and if you're an emotional trader or you don't know what you're doing yet, don't trade month end. Trading month end, now this is the reason, right? Now, a lot of people will say, JJ, it's not right to tell people not to trade month end. But if you're emotional and you tend to get sucked into bad trades, go back and look at your trading history and see that you always blow up your account near month end. Now, there's a reason for this. The reason is because the smart money sits on their hands at the end of the month and protects their profits. Dumb money gets desperate and tries to pay their bills at the end of the month and blows up their account. So do you want to be smart money or do you want to be dumb money? Right? The choice is up to you, right? It's not about patience. It's about skill. And sometimes the business is not for you to be taking stupid risks. So if people who have billions are being careful at the end of the month so they don't blow their month, would it not make sense for you to act likewise? Why would you be taking risk at the end of the month? Right? Do you know more than these people? No, you don't. Right? The end of the month is when all traders, just like Fridays, right? The majority of traders tend to blow up their accounts on Friday because they didn't make any money during the week or they lost money during the week and they push it on a Friday. Happens all the time. Let's see what happens when London opens. London's back to work today, right, Raj? You guys are all back at work? I, like you, Howard, I'm starting to be short biased here because I'm seeing constant sellers at 48, 48 and three quarters, right? Let's see what happens when London opens. Let's see if London can take out that 44, right? If it can't, it'll rotate up to 51. The Great Wall of 44, right? See if we could take out 44. What's up, Cisco? How's paradise? Well, you know what? I was looking at that too, right? I'm looking at the lows of those candles keep getting higher, right? But the thing is, if there's a constant seller at 48, one thing I know about being a seller is if enough sellers start coming in and piling in, we'll take the bottom of those candles out. Or if the business is really slow, it'll just jerk us around and maybe chop between 46.5 and 48, which is really annoying because the smaller the candles get, the harder it is to trade. There's no follow through, right? So say you're selling, there you go. See how we just took out that formation, right? We just nailed out that formation because the sellers are starting to get antsy, right? Sellers are starting to get antsy and they come in and they're pushing down. Now let's see when that next candle opens up. Will they lift above 47.5? Now the reason why I was short biased is this thing they just won't let it above VWAP. They won't let it above 48 and 3/4. That's why I'm short biased. So if I was short, say 48, 47.5, I'd put some bids down here at 46.25, 46.5, and see if I can get a cover, right? Exactly, exactly. There you go. Right? They want to get rid of their product, exactly. Right? Now London's going to open here in 30 seconds. Let's see if we can take out that 44 wall of bids. Because as soon as the short sellers, who are all sit here, they're all waiting to buy here. As soon as they see large orders come in, they'll drop their buy orders instantaneously. Now everything is done electronically, so that process happens very quickly, right? So now here we go. Watch that K low and see if we can take it out. Took it by one tick, right? There we go. Finally. See? There you go, Howard. We finally had some follow through. So if I was short multiple contracts from 47.5 to 48.5, I'd be taking them back right now. I'd be covering. I cover where the stops are, right? Because I know there's going to be some competitive buying. If we have some serious selling, we'll get accepted underneath 44 and come down to this 41.5, which is just right here. Hey, Alexander, how you doing? Let's see. Do we get back up over 44 and 3/4? Is that just a quick inventory correction, or do we get some follow through selling? If it's yeah, that is a look below and fail. right? It looked below 44 and 3/4. So if you're going long here, you put your stop at the bottom, of 44, and then you're going to sell some up here in the 46s if it can get up there, right? Now, a lot of times I will enter this trade early, right? I'll rush into it, get in, get stopped out, and then it'll work. So right here, when I see it futzing around at 44 and 3/4, I'll just take it easy and let the large traders work that level out. Because that was just a quick move up to 46, and then the sellers came right back in. See, you can see the sellers coming in here on this candle. So let's see if it can clear that area, right? And then you can take the trade, but make sure you sell into strength, because if the market can't offer up to this area here, then you know that there's selling competition, right? So if you bought 45, right? I bought 45. I put a 46.25 offer out to see if I get taken. If I don't get taken at 46.25, I know, uh-oh, I better lower my price. Okay, I'm out at 46.25. And I'll sell them where they're taking me, right? 46 half, 46/4, I don't care, because it's a scalp, right? And I would rather sell and make 3 or 4 ticks than lose money, especially in chop, right? This way you can manage your expectations, right? The hardest thing retail traders have is they take a trade and they don't know whether it's going to work. Well, if you pay attention to the 1-minute candles, it'll tell you, right? So I bought 45, but I saw that there was a seller at 46.25. So I bought a couple of micros, but when I only sold one at 46.25, I sold the other two at 46, right? It's better to make 3 ticks than to lose 2 points, right? At least you're on your toes. This is why I think it's very important for retail traders to know how to scalp, because it teaches you how to think quickly, right? And you train yourself to react. So when you train yourself to react, you don't get stuck going, should I do it? What should I do? I'm in this trade. What do I do? I'll look on Twitter. Oh, this guy says to hold it. By that time, you've blown up your account, right? Or you've lost so much money, then you'll start doing all this stupid revenge trading and all of that stuff, right? This way, you adopt good business habits, take intelligent losses, right? So had I bought 45 and it offered at 44 half, I'm out of the trade, right? I don't go long delusionally and hold runners when I know that the market has all the inventory of the markets above you. So if I'm long at 45 and I can't get rid of my contracts at 46.5/4, why in God's name would I hold a runner? Now it's trading 42, right? Exactly. There you go, VS, right? And if you're dialed in, you can turn around and short it, right? When you see that your long's not working out, if you're a fast trader, after a while, you're going to turn around and hit that short, because it lost 45 and the sellers are competing, right? There's no sense holding a running trade in a choppy market environment with no follow through to the upside. You have to be aware of the conditions under which you're doing business. Otherwise, you're just hoping and wishing and praying, right? There you go, Howard. Right? No sense holding runners in a choppy market and you see that there's an obvious seller here. Why would you hold a runner? You just get rid of your inventory before it cracks 44, right? There's no sense to hold a runner in a downtrend. When you're taking a responsive long in a downtrend, right? Why would you hold a runner? How would I trade it without cost basis and balance zones? I could just watch the offer and draw a line. Why would I not use cost basis, Fancy? Cost basis is how the market works, right? So why would I not use it? You know how a market works, right? You buy a bunch of cheap crap, it's got a cost basis. You sell it for a higher price, that's your profit. Why would you go against that? Exactly, Cisco. Exactly. Doesn't make any sense. Sorry. No, it's not complicated to market at all. It's the easiest thing in the world. You just got to do it more than once or twice. The trick is repetition. I have videos, I show people how to do it all the time. Listen, if I can do it, you can do it. Who is selling? It doesn't really matter. Sellers are competing, Muhammad. By the time you're trying to figure out who's selling and who's buying, you're going to miss the trades or you're going to get caught upside down. What you need to do is clear your head and think about the business. So if you see a seller at 45, who cares who the seller is, right? And if you see that seller move down to 44 and everyone's competing, you know there's no reason to be going long, right? That's why we have a trading setup. That's why you mark the balance zones every morning, right? I have a 5-step process that I teach people. First thing is to look at the market. Let's go look at some balance zones right now because this guy, Fancy Guy, is saying that it's too hard to figure it out. It's not that hard, man. All you got to do is look for a high and a low. There's a balance zone right there, right? Look how simple it is. There's a high and a low. You look above that high, you go down under that low, you come right back up to that high, right? All you're looking for are the same people buying and selling on both sides. Once you identify that, your life becomes so much more simple. Practice it. Just practice. You know what the holy grail in retail trading is? It's discipline and repetition. Both things that really suck. Because being disciplined is not glamorous. It's really boring and it's really hard, right? And repetition, which drives most people crazy. Right? Now let's see. Hey, Luke. Yeah, no, that's good, Cisco. Always have your broker's phone number on a sticky note on your trade desk with your account number, just in case you lose your electronics. Right? Hey, Jason, how are you doing? Go test out that overnight low. Let's see if now we're going to futz around over 36. Yeah, that's true. Yeah, have that app on your phone so you can. I'm long 37, selling 38 and a half, selling 39, and I'm flat. So I just did the look below and fail. I bought 37, put my stop at 36 and a half, and then I just sold into this little pop. Oh, that's pretty much it. Let's see if we can get up to 40. Right? This is the typical look below. Right? Fail, so you buy it when it fails. You put your stop here, and you sell into the strength because inventory is above you. Right? It's okay if you miss the short. You can get the responsive long. Right? Yeah, the worst is when when your data goes out and you're in an active trade. Thank goodness it doesn't happen as much as it used to in the old days, but it's still not good for the old heart. Oh, gives you a bit of a jolt. Can you do a BTC position play? Uh, let's go look at the coin of bitterness. I haven't really looked at it this morning. Hang on one sec. I don't trade Bitcoin. Oh, little liquidation in the old Bitcoin. Let's see if we can get underneath that 108 level. I'd love to get some here. 102, this 97. My last buy on Bitcoin was 76,000. I was trying for 72. So what I do with Bitcoin is I just buy it and I put it away. Just in case the 0 and 1 mafia do their thing. But I'd love to see it liquidate lower. Well, BTC is very mechanical, right? Those skewed levels, I apologize for those. It's before I learned how to draw straight lines on TradingView. not bad tonight, or this morning, I should say. Some not bad action. It's good. Now, I bet you Friday's really slow. Long weekend, right? The last long weekend of summer. Hello from Music City. Hey, Blues Queen, how you doing? Good to see you. And the sun has come out in Liverpool. Right, Raj? It's always sunny in Liverpool. It's his favorite city. He just won't admit it. The V-shaped recovery? Yes, that's exactly what happens. So what happens when you get this V-shape? The actual reason is you get sell orders that take the market down under a certain level, right? Then those sell orders get completed. And the sellers realize that, hey, buyers are lining up, we can raise price. Sometimes sell orders will bring in buyers, right? Because think about it, Mohammed, when you put something on sale, right? Sometimes that'll bring people in, right? So supply shuts off when sellers realize, or when their software realizes, that hey, there's buyers. So let's raise price and let's make them chase price higher, right? That's why you guys get that V shape that you like so much. Cool. Oh, and that's what, this kind of stuff is what we teach you at the Trading Syndicate. Love you guys to come and join us. Check it out for a month. And folks, if you do join, right, use the code in the banner there to get 25% off. The other thing is if you join, please reach out to me and message me. Don't just join and then just drop off. Message me, say, hey, JJ, I need some help with this. We'll have a chat. I'll even get on the phone and talk to you if you're having trouble, right? We're here to help. Take advantage of it. You stayed up last night? Yeah, I find I'll end up just going to bed if nothing really big is happening. Gotta have your sleep. Getting old, you know. Now it's kind of slowing down. Not much going on. Does anybody have any questions? But if you do need help, reach out. Okay. Looks like we've got sellers here. They're moving down. I'd be very curious if we could come and test that 64.28 level. No, I don't look at Delta at all. It's a waste of time, back one. For me, the way I look at trading is what is the least amount of information I need to make money. So I have a TPO chart that tells me where I am in the city, and the 1 minute candle chart tells me where I am in the neighborhood, like a map. And I don't need to look at anything else. Simplicity. I don't use the DOM, I don't use Delta, I don't use Bookmap, I don't use footprint, noseprint, fingerprint, all of that nonsense. That's all marketing to get people sucked into software, right? And most people don't even understand what delta means, right? Delta is the bid-ask difference, right? So if delta is going up, it means people are taking the offer. If delta is going down, it means people are hitting the bid. Sometimes price can be going up while delta is going down because product is being absorbed on big bids. People don't even know that because they don't know how to bid up a stock. The more information you have on your screens, especially by people who never worked in the industry, right, is that they don't understand the business and they misinterpret data, right? So, back one, are you watching my screen? You see this little red line? That's the offer. I was the offer my whole life, okay? I'm the seller. When the seller raises price, it means there's buying. When the seller lowers price, it means that he has to compete with other sellers. It's a market, right? So you guys will use things like absorption and delta and confluence and flatulence and patulence and all this nonsense, but none of it actually makes people money. So how do you use it in a trading setup? Where do you put your buy order? Where do you put your stop? And give me the business reason why. Because without that, it's all just BS. And really, a lot of the stuff that people talk about in trading circles, especially retail trading circles, unfortunately is just class A gibberish. That you'd never actually use that kind of talk if you worked in the industry. When you see the offer going lower, P Hunter, it means that sellers are competing. Right? I've always been a liquidator, yes. 200 IPOs, billions of dollars in order flow. How do my clients get their stock with no cost basis? Is because they take the companies public. The less you have to look at, the more you can concentrate on execution. Because execution is like a street fight, right? And you don't want to be thinking about Pythagorean theorem when you're getting punched in the face. Know what I mean? You want to know how to move, how to react, how to counterpunch, right? And you train yourself to do that. Because make no mistake that trading is like being in a street fight. And if you're looking at too many things, you're going to get knocked the F out, right? Just like the movie Friday, right? Right? Simplicity, right? Can you explain this trade to a 5-year-old or to a golden retriever, right? If you can't, it means you don't understand the business. If you ever hear somebody say it's random, it means they have no clue what the F they're talking about. Because there is nothing random when there's billions of dollars on a table. Hey, Trade Maker, what are you doing up? uh, anyway, folks, have a great morning. Come see us at the Trading Syndicate, and we'll help you actually make some money. Cut through all the gibberish and double talk and indicators that don't work. We'll teach you how to trade for real. Thank you so much for joining me. Have a wonderful morning. Be smart out there, okay? Right? Be smart out there. Only take those A plus setups. Be a snob with your money. Be snooty with your money. Before you give it to a trade, go, hey, can I trust you? Thanks, folks. Trade safe. Bye for now.